What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTii technicals and statistical threat analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord, ARCab. Okay, you guys, without any further ado, let's go ahead and dive right into the charts. So we are looking at GTii on the hourly chart right here, you guys, and we did notice in the earlier videos for GTii that we were building, or we are currently in a descending broadening wedge, you guys. So you guys know that if you are a regular listener, you'll know that I talk about the golden rule of three very often, you guys, and that is usually where we test the resistance 1, 2, 3 times, followed by a capitulation event or accumulation of sorts before an attempt to actual true breakout on test number 4, you guys. So test number 4 looks like it actually failed, but the reason it failed, you guys, is likely to what's happening in the broader markets. I mean, we can actually just add, for example, we can add BTC right into this, you guys. And as you can see, BTC is in a sense, kind of following what's happening. So we had the pump of BTC in recovery from the sell-off of what's happening in the FTX liquidity crisis, you guys. So we had that pump, then we have that pump right here, but the sell-off happened anyway, and then we continued to the downside, you guys. So this is broader market problems, you guys. Also, you can see if we even add the SPY into this, you can also see the SPY is also on that trek to the downside, you guys. So there is a lot happening within the markets that are essentially bearish. You can see the pumps to the upside, you guys, followed by the pumps in GTii. It's just I don't think there's going to be any escaping, you guys, when the major indices and the major larger coins in the crypto space are all in turmoil. Everything is likely to bleed around them, you guys. Okay, so just don't panic. We are looking still pretty good for GTii. This setup is actually a reversal signal all on its own, and a reversal signal to the upside, to be very clear. And it does have an upside price objective for us to be able to look at, and it usually is at the genesis of the formation itself, you guys. So if we were able to just look at this line, you're looking at about $4.74 as a take profit for this formation itself, you guys. So there is that for us to consider. And another, I mean, if we jump into the buy hourly, we can actually, no, it's more visible in the hour. You can actually see a form of a bull flag happening right over here, you guys. Silly little pattern, but I don't typically follow this type of pattern, you guys, but it is indicating in raw price action a potential move to the upside. Not only that, is that we have an hourly print of a hammer candle at the bottom of a trend, which is also in candle analysis, also a bullish signal that we are moving to the upside. However, we are in a immediate short-term time frame right here, you guys. The 1 hourly time frame there is some noise within this smaller time frame, so it is going to be likely a little more difficult for us to be able to break out of this. But in technicals, in formation study, we're looking at already the 3 touches confirmed, followed by that capitulation, and now we do have an attempt at the 4th, and it looks like we're not done with it. So price action or sentiment behind GTii sees this. We're primed to break out of this and find some type of resistance at, let's just go ahead and draw a fib level from the current swing high to the swing low and see what we have, you guys. So actually, let's go ahead and do it to the pre-market low and see what that can bring us. Okay, and now this is from that swing high, right? Okay, so yeah, I mean, wow, you guys. So yeah, breaking this resistance right here, you guys, is very much in confluence with, let me go ahead and just draw a trend line right here so you can see. Breaking the resistance is in direct confluence with the 0.618 inverse golden mean, the golden ratio, you guys. So it is a little bit of a tough area to break out of, and as you can see, we also use it right here as a form of resistance. So we're likely to find 2 forms of resistance here. Now let's bring up some SMAs just to see what else we have against us. Okay, the good thing is that we're still above the 10-day simple moving average, so this is now a form of support and well, excuse me, you guys, and can also serve as kind of a guide, if you will, to the upside. Similarly to what you see here, you see that the SMA 10 is just guiding price action towards the downside, you guys. But when we clear to the upside, this now serves as a form of support. We do have the SMA 50 right over here, you guys, in direct confluence with the NOT 786 at $3.80. So that is another obstacle for us to consider, and it looks like we also used it today alongside the resistance of the wedge as a form of a short position opening or a form of resistance, right? So now let's open up an EMA, and we'll likely see that the 30-day exponential moving average could be right above us as well as resistance, and it is, you guys. This is right over here and in confluence with the 5 fib with a 0.5, and we are likely to find some type of resistance right here, you guys. The good thing is that the 7-day exponential moving average has now crossed has now crossed the SMA 10, which is bullish, and now we're using it as a form of support. If you can look right here, this is the line, you guys, and this line used it as support, this candle used it as support, this one used it as support, so it's likely that we can use this as support to move on to the upside, you guys. So the breakout could be in accordance to this candle high at approximately the 1 fib at about 389 before facing another downside event to test now the NOT 618 as support and the newly converted resistance into support, you guys. So let's go ahead and move on to the next chart and take a look at what we have, you guys. So this is in a large ascending channel that we are in, you guys. This is a 3-day. We're looking at a macro perspective right here, you guys. And I did notice on the volatility versus momentum profile that I have back tested here for you guys, we have some interesting results that are leading a potential move to the upside, and a very desirable move to the upside, you guys. So before I say these things, I want to let you know that I am not a financial advisor. Please take whatever I do say within these videos as a form of entertainment. I can't actually suggest for you to sell an asset or buy an asset, you guys. So please do your DD and we'll be okay. Okay, so yeah, you guys, so the criteria for meeting these statistical metrics is based on this. Every single time that we have crossed a critical high zone, which I consider to be above the 90 percentile, this red line right here of volatility, I have taken every iteration where we have started a contraction phase to the downside from those critical highs. Volatility is direction neutral, so we pair it with a stochastic momentum to gauge a bias in direction, you guys. So now through every iteration, I have measured the upside thrust versus the duration of the iteration, and also the times that the iterations were based on the volatility versus momentum profile. I have taken also consideration of the incorrect versus correct iterations to the upside, you guys, and that has given us these metrics here. Now, in guessing the direction down or up from the stochastic momentum or the momentum oscillator, out of 11 total iterations, 1 has been incorrect in guessing the direction for the asset, you guys. So that gives the momentum indicator, this one, an upside accuracy of 90%. Not perfect, but very good and considerable. If it's an A minus, guys, this is pretty good. Okay, so now out of the correct BBWP, the indicator, now contracting from fully expansive or critical expansive levels, the upside iterations, correct, it has gotten 7 out of the 11, you guys. That gives us an averaged upside accuracy of 68.63% with an averaged upside thrust of 3,202.47% over the span of just over 32 days, about 32 and a quarter days. and this is proof of work, you guys. Please know that these metrics are statistical metrics. They are not certainties, so we definitely have to keep that in mind. What we are noticing right now is that on the 3-day time frame, the 3-day stochastic momentum is suggesting a continuation to the downside, and I have noticed that we are in a type of trend line regression rejection situation happening right over here, you guys. So there are potential bounces that we're going to end up getting, and they are likely to be to continue testing our ascending channel, because we have not fully confirmed that, or there may be confusion as to why we have or we haven't. The reason why I say this, I mean, guys, this is a macro perspective. Every single candle here is 3 days long. So we have, it looks like we have tested here and here. And I know that there are many others, but I'm talking about the macro lows. So it looks like we have tested once and twice, and it looks like we have tested the resistance once and twice. And the reason why I'm saying 1 and 2 for either is because the formation it requires for us to test the support, both the support and the resistance 2 times in order for us to validate that we're even in the resistance in the first place, in the channel in the first place. My apologies. So it looks like we potentially are, you guys. So there is a break of market structure right here. When we broke out of this channel right here, testing the number 1 test, we made a macro high of about $3.46 right here, you guys. So this could be the all-time high, it looks like. Now, for this moment I'm talking about. And since we were creating a higher low, lower low structure, you guys, and we recently broke out one more time to create the all-time the 52-week high, or all-time high, actually at $8.85 based on this chart, and it did test the number 2 followed by a capitulation event, you guys. Now this is, it's very reminiscent to what's happening within the broader markets, you guys. What we're looking at right here, the sell-off, like we said, the sell-off is likely in sympathy to BTC and the broader markets. So if it weren't for this, you guys, then we'd probably be attempting to try this one more time. The third test is usually the most dangerous one that leads to a larger sell-off, you guys. So that's one that we're going to have to keep an eye on. But what I was saying is, in making this all-time high, we actually created a new higher high. So we are technically, in a macro perspective, we're looking at a series of higher highs and higher, I mean, so far higher lows, but I don't consider this to be a macro low just quite yet. The new macro low could be weeks and months ahead of time, you guys, at potentially 11 cents, and that's not a certainty whatsoever, you guys. Please take that with a grain of salt. I'm only saying it because we're in a macro trend. There is the potential to where we never can see these levels ever again. You know what I mean? But if we did touch these levels at around 11 or 12 cents, you can see that we would have a direct confluence with the cup and handle top as a resistance right over here, you guys. Okay, so there are, and look at all of these are serving as resistance when we were barcoding here. So there is confluence or confluence within this target right here, you guys. It's just, again, it's not guaranteed. So now let's go ahead and gauge a bias and direction for the coming session, you guys, which is looking pretty good. Okay, so new listeners, we have the bullish control zone upper half of the RSI and bearish control zone bottom half of the RSI. The inner workings of the RSI are the weakness percentile of either, and the outer workings is the strength percentile of either the bulls and bears, you guys. So we are suggesting a continuation onto the upside. The thing that we have to keep in mind here, you guys, is that first of all, we are below the moving average. The signal line is a light purple and the moving average is the pink. So the moving average is above us, which is bearish, and we are also within the shallow areas of the weakness percentile, which can tell us that we can be gravitated into this zone right down here, you guys. The pivot is not super strong to the upside, which can be reminiscent to the indecision happening in the macro perspective for the economical data releases, you guys. Now the bi-hourly is also suggesting a slight upside continuation. We're getting a hint from the moving average that it is an upside move, and you can see that we're using it as a form of support. So this is likely to find some downside and upside, or some type of sideways trading right over here, you guys. Let's move on to the 6 hour actually and see what we got. 6 hour has now made a bullish cross above the moving average. Now the problem here is that we are within the shallow areas of the bear weakness percentile, and the shallow I'm sorry, the deep areas of the bear weakness, which means that bear strength is literally about to magnetize us down here, you guys. We're about to be drawn in. As another hint to take is that the moving average is being used as a form of resistance on the way down. We have to keep that in mind. Let's look at the 12-hour RSI and see what it's got. Again, an upside pivot, but within the shallow areas of the bear weakness percentile, and we are trading below the moving average, you guys, and you can see that we're using it also as resistance. We have to watch out with what's happening right here. We may see a short-term upside followed by a downside, you guys. The daily RSI, let's see what it says. Daily is suggesting a continuation onto the upside. However, it is in the shallow areas of the bear weakness percentile, and then the moving average is above us, which is bearish, and this can potentially give us some sideways trading for the meanwhile. Again, likely in respects to the economic data release, you guys. I think this is a pretty good place to leave off. If you have any questions or concerns, you guys, please don't hesitate to reach out to me on Discord, on Twitter. I'll leave the description. I'll leave the links in the description below for you to consider joining the ARCap trading community on Discord, you guys. But with that said, I wish you a good night, and I'll catch you at the bell mañana. Adios.